Hello everyone and welcome to the second lecture of process costing. Of course, we started our discussion in process costing in chapter number 17 by discussing or distinguishing between two systems. The first, which is the job costing system, and the second is the process costing system. And then we started our analysis and discussion or details within the process costing system itself. Of course, we said that we are going to discuss this application of a process costing system according to three scenarios, or according to an example or an illustration that has three scenarios. The first scenario, or case number one, was of having no beginning inventory and no ending inventory. Of course, no beginning or ending work in process inventory, and it only would have finished goods or completed and transferred out goods. And of course, we said according to this scenario or according to this case, the application of process costing is quite simple. We only divide, or we use an averaging method by dividing the total cost by the number of units, or the total number of units that were finished and completed and transferred out. Of course, we started the last time our discussion of case number two. Of course, the second scenario, or the number two case, would not have any beginning inventory, but it would have some sort or some amount of ending work in process. And of course, in the second scenario, or case number two, we said if we have any ending work in process, we need to apply the 5-step procedure that we took the last time. Of course, according to case number two, the information or the data for this example is as follows. We have, of course, 0 beginning inventory, which is in February 1, because in January 31 we did not have any ending work in process. Therefore, in February we would not have any beginning work in process. The units that were started on or within the manufacturing process in February was 400 units. And of course, we completed and finished 175 from the 400 units. Therefore, we would have an ending work in process by the amount or by the number of 225 as unfinished or uncompleted units at the end of February 2012. Of course, they also, according to the data of case number two, or the scenario, or the second scenario, they gave us the percentage of completion for these unfinished goods. Of course, they gave us, according to the direct materials, they took 100% of the direct materials. Why? Because according to our example or illustration, the assembly department adds up direct materials at the first or at the beginning of the manufacturing process. Therefore, any units that are started, any units that are within this organization, the first thing, it would take 100% of the direct materials. Therefore, the 225 are fully equipped or have 100% of the direct materials that they need. While as the 225 has stopped at the level of completion of 60%. Why the level of completion 60%? Because we said that the conversion costs are added evenly onto the manufacturing process. Therefore, if they took 60% of the manufacturing costs or of the conversion costs here, that means that they used up, or that they reached to the percentage of completion of 60%. Of course, these are the two different categories that we have, and as we said in the first lecture, that we are going to categorize costs according to when we are or when costs are added up within the manufacturing process. Therefore, we would only have two, according to our illustration, we would only have two categories: the direct materials, which is added up at the beginning, and the conversion cost, which is added up evenly upon the manufacturing process. Any questions? Of course, they gave us also the total costs that are added in February. They gave us $32,000 as the direct materials cost and $18,600 as the conversion cost, of course, with a total cost of $50,600. Now, in such cases or in such scenarios with ending inventory or ending work in process inventory, we need to apply the 5-step procedure. Step number 1. The physical units, not only the output, the physical units, because we need to distinguish between the physical units and the equivalent units. We need to distinguish between step number 1 and step number 2. Therefore, step number 1, we need to summarize the physical units. Step number 2, we need to calculate the equivalent units. Step number 3, we need to summarize the cost to account for. Step number 4, we need to calculate the cost per equivalent unit. And step number 5, we would assign the costs onto the ending work in process and onto the finished and completed and transferred out units from the assembly department at the end of February. Let us see how is the application of these different steps. As we can see here, of course, the best way to do the steps is to do it according to these tables. You will see that the tables would present us with the steps in a summarized fashion and in an easy way that could be reminded or could be remembered at any time. Therefore, step number 1, we need to summarize the physical units. We said that step number 1, we need to answer 2 questions. Where did the physical units come from and where did they go? Therefore, as we can see here, we did not have any beginning. Therefore, the physical units would be 0 for the beginning work in process, as the data said for, or as the data presented for February. But in February, we started 400 units. Therefore, for the total of 400 units is the total units to account for. This answers the question, where did these physical units come from? 0 from the beginning inventory and 400 were started in this period. Any questions? Now let us answer the second question. Where did these 400 units go? Therefore, first of all, 175 were completed and transferred out to the testing department, while as 225 is still in the manufacturing process within the assembly department at the end of February. Of course, 225 units. Of course, the addition of these 2 numbers, or these 2 amounts, the 175 and the 225, must always equal the same number, which is the total to account for, of course, which is 400. But here, these are accounted for, which means that the 400 were distributed as follows: 175 completed and transferred out, 225 as ending work in process. Of course, these 2 numbers should always equal each other. To account for and accounted for should always be equal. Of course, now, if we need to consider the same scenario that was in case number 1. We said in case number 1 it is a simple averaging method. We divide the total cost by the total number of units, correct? Therefore, if we would not do the 5-step procedures, we would divide the costs, which were 50,000, I think, or 32,000 and 18,600. Of course, with a total of 50,600. Therefore, in order to understand the significance and the importance of the equivalent units, or why do we need to calculate the equivalent units, let us apply the same averaging method that we applied in case number 1. As we can see here, we have 400 units that were at the end of the manufacturing process. 175 were completed, 225 were not completed, or were still in the work in process category. Therefore, I would ask you now, is it correct to divide the total cost of 50,600 by the total number of units of 400?
No.
Why not? Excellent. Why? Because the 400 units are not all similar. We have 175 units that are completed 100% in regard of the direct materials and the conversion costs, and we have 225 units that are completed 100% in regard of direct materials, but are only 60% complete in regard of the conversion costs. Therefore, we could not assume that the 400 units are similar. They are not similar. 175 are finished, 225 are not finished yet. Therefore, in order to be able to use this averaging method to divide the cost by the total number of units, we need to use a common metric. Either to change the 175 units into the same percentage of completion as the 225, or vice versa, change the 225 units as completed units, which are the equivalent units. Therefore, now we need to apply a common metric. We need to perform some sort of calculation in order to make these units have the similar identity, have the similar measure, in order to use our averaging method without any problems. Therefore, we either, as we said, change the 170 units into units that are only completed up to 60%, or change the 225 that are completed up to 60% into finished or 100% finished goods. Of course, according to our equivalent units, or according to our computation of equivalent units, we said that we are going to change, we are going to compute the units or the unfinished units as if they were finished. Therefore, we need to answer the question of how many units would be produced if we have incurred the same costs in order to produce 225 units up to the percentage of 60%. This is the definition of equivalent units. Of course, we are going, in order to have this common metric, we are not only going to calculate the equivalent units for the work in process, we also will calculate the equivalent units for the finished goods, or the completed and transferred out. Therefore, we are going to calculate the equivalent units for the 175, and we are going to calculate the equivalent units for the 225 in order to have this common metric. But always, the equivalent units of the 175 units are the same as the physical units. Why? Because we said that the 175 units have taken 100% of the direct materials, 100% of conversion cost. Therefore, if we would answer the question, how many units would be produced by incurring the same costs that were incurred in order to produce the 175, it would be 175. Correct? Therefore, the first step is to calculate the equivalent units for the finished goods, as we can see here. In step number 2, we need to calculate the equivalent units. First of all, for the two different categories, we are going to calculate the equivalent units for the direct materials in separation of the conversion costs. For the units that are completed and transferred out, as well as for the ending work in process. Of course, as we can see here, the 175 units are 175 equivalent units in regard of direct materials, and 175 units in regard of conversion costs. Why? Because according to our example, they took 100% of direct materials and they took 100% of conversion costs. Therefore, the simple calculation here would be 175 multiplied by 100%. This is for the direct materials. And then for the conversion cost, it would be 175 multiplied by 100% also. Therefore, it would be 175 units, 175 units. Now, we need to calculate the equivalent units for the 225, which is the ending work in process. Of course, for the 225, as we took in the example, it took 100% of direct materials. Therefore, in order to calculate for the direct materials, we would multiply 225 by 100%, which would equal 225. As we can see here, 225. Why? Because it took the total direct materials that it can take. 100% of direct materials. Now let us consider the conversion costs. Of course, the conversion costs, we have only reached up to the level of 60%. Therefore, the percentage of completion here is only 60%. Therefore, we need to answer the question, how many units would have been produced? Of course, would have been produced in full as completed and transferred out if we have incurred the same costs that were incurred in order to reach the 225 to 60% of conversion costs. Of course, the answer would be simply by multiplying the 225 units by 60%. Of course, as we can see here, it would be 135 units, which means, according to the equivalent units, we would produce 135 completed units if we incurred the same 60% that we have incurred in order to produce 225 units that were incomplete. And we would produce 225 units, complete units, if we used the same, or if we incurred the same costs that were incurred, of course, for the direct materials, for the 225 in regard of the direct materials. The same goes for the 175. We would produce 175 units if we incurred the same cost that we incurred in order to produce the 175 in regard for the direct materials and the conversion costs. Any questions? Therefore, as we can see here, now we would have this common metric. The 175 are complete units. The 225 are complete units. The 175 for the conversion costs are also complete units. The 135 are also complete units. Therefore, the summation of the equivalent units of 400 and 310 are common. They have the common metric, they have the common measure that is needed in order to divide the cost upon these number of units. This is the importance of using equivalent units. Any questions? Now let us go to step number 3, 4, and 5. Of course, we said step number 3, we need to summarize the cost to account for, correct? Of course, in this case, or in this scenario, the only cost to account for is the cost that were incurred in February, because we do not have any beginning inventory. If we had any beginning inventory, it would be added up in this step. But because we do not have any beginning work in process inventory, therefore, all the costs to account for are the costs that are incurred within this period, which is February. Of course, these costs were given according to the data of the illustration or the example. $32,000 of direct materials were incurred, $18,600 of conversion costs were incurred, therefore with a total of $50,600. Now we have the number of equivalent units, which is the common metric. Now we have the total cost to account for. Now we could use our averaging method by dividing the total cost to account for by the total number of units of the equivalent units. But But we need here to be cautious, to be careful, that the equivalent units, or the total number of equivalent units for the direct materials, is different than the conversion costs. Therefore, we need to calculate for the conversion costs in separation of the calculation for the direct materials. That means that the equivalent units would be calculated for each cost category, and the assignment of costs would be for each cost category in separation of the other. Step number 4, calculating the cost per equivalent unit. Of course, we have now the cost, the 32,000, and we had the equivalent units from step number 2. Therefore, the 32,000, this is from step number 3, and the 400 equivalent units is from step number 2. Therefore, the $32,000 divided by 400, which is the common metric, which is the equivalent units, would give us $80 per equivalent unit. That means each equivalent unit costed us $80 in direct materials. Now, according to the conversion cost, the 18,600 is also from step number 3. And the 310 is the total number of equivalent units in step number 2. Therefore, dividing the amount in step number 3 by the amount in step number 2, we would get $60 as the cost of conversion cost, or the conversion cost per unit or per equivalent unit. That means that each equivalent unit has costed us the amount of $60. Any questions? Now, the main point of process costing is to calculate and assign the costs for the work in process, or the ending work in process, and the finished and the completed and transferred out goods. Therefore, we can do this by introducing the last step, which is step number 5. Of course, if we know the cost per equivalent unit now, and of course we know the equivalent units for each category and for the work in process and also for the finished goods. Therefore, we can assign the costs in a simple step. Of course, the assignment, of course, here, first of all, the completed and transferred out units. We need to calculate the costs, or we need to assign the cost to the 175 units. We need to know the cost of the 175 units. Of course, the 175 units would be multiplied by $80, and by $60, of course, the addition of these two amounts would give us $24,500. This means that the completed and transferred out units, which are 175 units, has costed the organization $24,500 as direct materials and conversion costs. Now we need to calculate or assign the cost for the ending work in process inventory. Of course, the ending work in process inventory was by the or had the units of 225, correct? But we are going to assign according to our equivalent units. We are not going to assign regarding or by using the physical units. We are going to use the equivalent units, because all the calculations in the previous steps were according to the equivalent units. Therefore, 225 equivalent units multiplied by 80, which is for the direct materials. This is the cost of direct materials. And 135 multiplied by $60, which is the cost of conversion costs. Of course, adding these two numbers up would give us 26,100, which means that the 225 units that are still within the manufacturing process in the assembly department at the end of February has costed the organization 26,100 as direct materials and conversion costs. Of course, as we can see here, the total costs that are accounted for, 50,600, should always equal the total costs to account for. The same as step number 1. The number of units to account for should equal the number of units accounted for. Here, the costs to account for should always equal the costs that are accounted for. Any questions? Therefore, this is the application of the 5 steps that we have introduced in the last lecture. Now let us consider the journal entries. Of course, the journal entries are the same journal entries that we took in the beginning of the course of Cost Accounting 2, and the same journal entries that we took in Cost Accounting 1. The only difference between the journal entries in job costing, if you can remember the journal entries in job costing, or normal costing, as we took in Cost Accounting 1, are the same entries, or are the same journal entries that we are going to introduce in the process costing. The only difference is that in job costing, we had more than one work in process account. We had work in process for job number 1. We had work in process for job number 10. We had work in process for job number 100. But here, we will only have one work in process account, because we do not have different jobs or different specifications or different products for these, or different specifications for these products. Therefore, we would only have one work in process for each, of course, department that we are accounting for. Of course, as we can see here, the journal entries is as follows. The first entry is a summary entry. Of course, this entry should be 2 entries. First of all, the acquisition of direct materials, and then the usage of the direct materials. But this is a summary entry that summarizes both into one entry. Therefore, in the exam, if I would ask you to perform or to journalize a summary entry, you would journalize or a similar entry as this. But if I ask a detailed journal entry, therefore you need to, first of all, journalize the purchasing of direct materials, and then journalize the usage of these direct materials. Of course, as we can see here, work in process would be debited and the accounts payable control would be credited by the amount of 32,000, which are the costs of direct materials that were used within February for the assembly department. The second would be the recognition of the conversion costs, or the costs that were incurred for the direct material, for the direct labor and the indirect costs. Therefore, as we can see here, the work in process assembly, the same account as journal number 1, or the journal entry number 1 would be debited, and of course various accounts would be credited. Also, this is a summary entry, because the various accounts here, or as we took in Cost Accounting 1, this journal entry is a summary of different entries. First of all, we need to incur the wages expenses. We need to incur the different expenses, whether it is depreciation, whether it is salaries, whether it is janitor or secretarial support. Of course, here, if we are talking about a manufacturing process, therefore the secretarial would not be within the manufacturing overhead. For instance, the supervision costs, for instance, the electrical support or the electrical expenses, the utilities expenses, and so on. Therefore, all these costs, first of all, would be incurred by different journal entries, and then these entries and these costs would be closed in the work in process assembly, or would be closed in the work in process account. Of course, this is what we took in Cost Accounting 1. Now, number 3, of course, after finishing the 175 units, of course, according to our illustration, the 175 units, it would not be sold to outside customers, but it would be transferred from the assembly department to the testing department, correct? Therefore, we would credit the work in process for the assembly department and we would debit the work in process for the testing department, because we are channeling these costs from the assembly department to the testing department. Any questions? That's why we did not call the 175 units as finished goods. They are called completed and transferred out, because yet there are a manufacturing process to be introduced in the testing department. Any questions? Of course, as we can see here, this is the flow of costs. Of course, this is the summarization or illustration according to the journal entries that we have introduced. You need to consider them as well as the journal entries. Now let us consider the last scenario, which is the most complicated scenario of all the three scenarios. Of course, as we said, case number 3 would have beginning work in process inventory and would have also an ending work in process inventory. Of course, if we have an ending work in process inventory, this means that we are going to use the 5-step procedure. Therefore, case number 3 and case number 2 are similar in that both will use the same 5-step procedures. The only difference between case number 2 and case number 3 is the introduction of the beginning work in process inventory. Now let us take case number 3 or scenario number 3 for the month of March for the assembly department, or the same department for case number 1 and case number 2. Of course, in February we had ending work in process by the amount of 225. Therefore, this 225 units would be the beginning work in process in March. This is the summarization as we can see here, or this is the data according to case number 3. We will have a work in process beginning inventory by the amount of 225 units. And of course, according to our example, they said that the degree of completion of the beginning work in process is 100% and 60%. From where did we get this? From case number 2, from the past, from the information that was gathered in the month of February. Therefore, this information is not new information. Now, the cost of the 225 is 18,000 for the direct materials, 8,100 for the conversion cost, and 26,100 as total cost. From where these numbers or figures has come? From our calculation, or or from step number 5 at the end of the month of February. As we can see here, in step number 5, we said that the 225 units had total cost of 26,100, which is 18,000 and 8,100, I think. The amounts that is used or that are going to be used in case number 3 had come directly from case number 2 as the ending work in process. Of course, according to our example, they said that 275 units were started within March. Therefore, we had 225 that were started in February and 275 that are started within March. Of course, they said that the number of units that are completed and transferred out during March were 400 units. Therefore, the 225 plus 275 would be 500. Minus 400, which are completed and transferred out, that means that we have 100 units as ending work in process. As we can see here, we have beginning and ending work in process. Of course, because we have an ending, as we said earlier, because we have an ending work in process, we are going to use the same 5-step procedures that have been used before. Of course, the 100 units are 100 units as ending work in process. Therefore, we had 225 that were started in February and 275 that are started within March. Therefore, the 225 plus 275 would be 500. Minus 400, which are completed and transferred out, that means that we have 100 units as ending work in process. As we can see here, we have beginning and ending work in process. Of course, the 100 units or let us say had incurred 100% of direct materials, which is obvious. Why? Because we said that the direct materials are added up at the beginning of the manufacturing process. Therefore, any units or any unit that has been started within the manufacturing process, the first thing it would be added by is the direct materials. Therefore, the 100 ending work in process had 100% of direct materials, while as it had only 50% of conversion cost. That means that the 100 units have a percentage of completion, or had ended at the end of March at the percentage of completion of 50%. Of course, the costs that are incurred during March is 19,800 and 16,380, with a total of 36,180. We need now to consider that these costs are not only the costs that are incurred in order to manufacture the 275 that are started within this period, but also to complete the 225 that were started in the last or in the previous period, in order to, or these costs were incurred in order to complete these units that were started in the previous years or the previous periods. Therefore, the costs here that are added during March would complete the beginning work in process and would start the manufacturing process on the 275. Of course, this complication or this new information of having beginning inventory needs to be considered in a different way. Therefore, we need to answer the following question. Is the beginning inventory would be the beginning inventory finished first and then the manufacturing would start on the 275? Or the manufacturing and the completion of the 275 and the 225 would be at the same time? The question here, we need to determine whether we first of all in March complete the beginning work in process that was started and unfinished in the previous period, or would it be that we are going to start the manufacturing process on the 225 at the same time for the 275? Of course, it could be the first scenario or it could be the second scenario. Therefore, we need to use an inventory evaluation method. Of course, as you took in accounting principles too, there are different inventory evaluation methods or inventory valuation methods. What are the inventory valuation methods? Excellent. The FIFO and the weighted average. Of course, the LIFO is no longer acceptable according to the generally accepted accounting principles. Therefore, we have the first in, first out, and we have the weighted average method. Now, in order to allocate and assign the cost onto the ending work in process and onto the finished work in process, or let us say the finished goods or the completed and transferred out units, we need first of all to assume one of these inventory valuation methods. Is it the weighted average method, or is it the first in, first out, or the FIFO method? Of course, if we are using the weighted average, it means that we are assuming that we are starting the 200 or we are completing the 225 at the same time as starting the 275. Therefore, we will use a weighting or a weighted average method. But on the other hand, if we assume that we use or we need to use the first in, first out, it means that first of all we are going to complete the 225 units and then start the 275 units. If this is the case, that means that the 225 units would be all considered finished, or let us say completed and transferred out, or is there going to be some units included in the ending work in process if we use the first in, first out method? Excellent. Because the first thing we are going to do is complete these units. If we complete these units, and of course, as we can see here, we have 400 units that are completed and transferred out. Therefore, from the 400, we would have 225 as the beginning inventory that has been completed. And then the remaining of the 400 would be from the 275 that are started within the month. Which means that all the ending work in process would be from the units that are started within this month. This is according to the FIFO method. But according to the weighted average, we do not have these classifications, because we are going to consider that there's a blend in the manufacturing process. That means that the 225 were finished at the same time as the 275 were started in the manufacturing process. Therefore, we are going to use this averaging method. Therefore, in any case that we have a beginning inventory, first of all, we need to designate or determine what is the inventory valuation method. Shall we use the weighted average, or should we use the first in, first out method? Now we are going to consider the two valuation methods. The first would be the weighted average method. Of course, the weighted average method would consider all costs, whether they are costs that were incurred in the previous year, or they are costs that are incurred within this year. We would not have any separation between the two. That means we are going to blend all the costs within one account or within one number. And then we would divide this total costs that are incurred, or of course this total cost, part of it were incurred in the previous year, and part of it were incurred in this, or let us say the previous period, and part of it were incurred in the current period. This total cost would be divided by the total equivalent units. This is the weighted average cost, or the weighted average evaluation method. Therefore, as we can see here, calculates the cost per equivalent unit of all work done to date, regardless of the accounting period in which it was done. Therefore, the step number 2, we are going to calculate the equivalent units for all the units that have been produced. Therefore, the output, or the total output for this or for a specific period, would be calculated without any separation, whether it was started in this period or it was started in the previous period. Of course, again, according to the costs, also the costs, we are going to consider the total costs, whether these costs were incurred in the previous period or incurred within this or within the current period. Of course, by this we have come to the end of this lecture. We are going to continue, inshallah, in the next lecture. Thank you for listening, and I'll see you the next time.